I'd say my financial portfolio was shaped on two things. One, watching financial stresses in my parents' marriage. Like it was feast and famine. He was an entrepreneur. So when things were good, it was feast. When things got tight, it was like kids were getting chucked down the stairs. You know what I'm saying? It's a true story.
Flat Bill Investor Podcast is brought to you by Drip Swag. Don't get bored with your swag. Get Drip Swag. Drip-swag.com.
Hi, and welcome to the Flat Bill Investors Podcast. I'm Josh Siglowski.
I'm Zach Spencer. Welcome. Josh, today we have an amazing and very laughy guy with us.
Super happy
guy. You've known for 1 year today, which is really kind of an amazing thing. It's a great anniversary to have you on the show. That's a good thing. But family man, great salesman. He's in M&A and a lot of people who run businesses. We'll get into that a little bit. But
and M&A is mergers and acquisitions for people, the audience.
So he's a business broker. I'm going to do the old hat switch up, which I love doing.
Yes.
You guys, we've got Josh Lindsey.
JL's in the house.
American Business Brokers with us today in the house.
Appreciate it.
Do I look better? I feel better.
You look rich.
I feel it. That's good.
To start off for the audience, what is EBITDA?
Oh, so it's an acronym in the space. It's earnings before interest, taxes, depreciation, and amortization. If you're in business, if you own a business, you're probably familiar with the acronym. Really what it is it's bottom line profit, right? Like how much does your business actually make?
Yeah, which is important when doing mergers and acquisitions.
Yeah. To peel that onion, to find out what the actual profit is, owner's salary gets added back, benefits, depreciation, amortization, the taxes, stuff like that. You get to that true owner profit, and then you start working multiples off of research, and that's how you get valuations.
Love it. And I think we're going to get into that. Tell us a little bit about you, man. I mentioned family man.
I have a family.
You do have a family. Okay, good. I like that.
Beautiful family.
Beautiful family. Yeah. How many kids you got? Tell us about you.
I got 3 kids. I got a freshman that's 15 and twins that are 11.
Okay, cool. Yeah, twins has got to be crazy too.
It was crazy in the first couple of years when they're like infants, but now it's fun. Like they're just like, they're super close and their friend groups are close. So they spend a lot of time together. It is fun.
Cool.
Yeah. Cause they're fraternal twins, boy and girl.
Oh yeah.
So
that's sweet. Yeah.
That's what's cool that they're
and
close.
It's just, the interesting thing is when they go vote, they both count as half a vote,
right?
Or
no, they get individual votes.
Okay. Not sure how that works, but
individual votes.
Okay, cool. Good for them.
Yeah. And then married to a beautiful wife, Danielle. How long you guys been married?
Yeah.
19 years today.
That's a leading question. A leading question. Yeah. Good. Well, dude, I appreciate you, and we appreciate you coming on your anniversary to come and share a little bit about your history. And we talked a little bit before the show about kind of how you got into where you're at now, but you started out just like in sales, or where'd you start out?
Yeah. So I started out in sales.
Really? The church mission is somewhat.
Yeah, that's pretty salesy. I went to the south of France. A lot of people would say it's a tough mission. I had decent success. I baptized 8 people when I was there. So I was selling Jesus out the gate.
Oh yeah.
I can do that. And then he came back and I was like doing telemarketing jobs. I worked in fitness and then finally got a break where I worked at a financial services firm in like a grunt position.
Okay.
Basically just a data collector. They called it a setter back then.
Yeah.
Where you gather data and then you'd hand it off to like a closer. Yeah. More professional salesperson, but that's how I got my start.
And that financial services, was that already like, were they buying businesses? Or was it more like they were doing like securities and insurance?
No. So what they sold was like debt consolidation. They were helping people get out of debt. Now, ironically though, it was great exposure because I remember being like early in my 20s and I'd be data gathering and I'd be going through with people and I'd be like, all right, how much do you have on your Visa? And they'd be like 15,000. And then it'd be like, how much is on your MasterCard? And they'd be like 40,000. I remember being like, how do you get a $40,000 credit?
I used to think the same thing.
Right? I'd be like, how'd you get 40 grand like on a credit card? And I'd go through it and they'd be like 6 figures in debt, just credit cards, plus a mortgage, plus car payments, et cetera. And you'd get to the end and you'd ask them all these questions like, do you want to change your life? And they'd be like, yes. And then I'd hand it off to a closer and they'd put them into like a debt consolidation where they'd refi all their stuff into one payment, free up cash flow, and then just help them power it down, so to speak.
Sure.
But it was very good for a young person to be exposed, in my opinion, of how much trouble you can get into.
I know.
With consumer debt.
I actually just did a post the other day on, I think we were like 3 or 4 years into our marriage and we declared bankruptcy, and it's because I wasn't taught. I lost a job and then I went and got those credit cards that you can get an advanced credit on. And I got 5 or 6 of them, within 6 months. It was like the money was gone, and then we sat down with my friend's brother and he's like, yeah, the best thing for you to do is wipe it out. and keep your house though. So we kept our house, but it was tough, you know, and I wasn't exposed to something like this. And that's where I've taught my own kids of like, hey, you can get into bad trouble if you do X, Y, and Z. Yeah. You don't need these $20,000, $30,000, $40,000 credit cards. They're not, I mean, they're 18.
Well, yeah, 18, but at high interest rates too, those things will eat you up.
Oh, for sure.
Yeah. So
yeah, especially you know, you can't afford those payments when you don't even have a job, you know?
Yeah.
You're like, oh, minimum monthly is like $100. And it just starts adding up when you're 24, 23.
Yeah, but isn't that the normal kind of protocol, which is if I can afford the payment, I can afford it.
Right.
Like a lot of people's thought process is, if you can afford the payment, you can afford it. But really in retrospect, that's not the case.
It taught me, number one, I paid cash for all cars.
Yeah.
But I've had people say, well, what's the payment on that? Even a luxury car. Yeah. Like, well, that's like $500 a month. I can afford 500, but then you have a, you know, $80,000 car, you know? So that's what kind of changed a little bit of mindset for me of those learning experiences.
Totally agree. Yeah. I'd say my financial portfolio was shaped on two things. One, watching financial stresses in my parents' marriage. Like it was feast and famine. He was an entrepreneur. So when things were good, it was feast. When things got tight, it was like kids were getting chucked down the stairs. You know what I'm saying? It's a true story.
Yeah.
And then the second being exposed early 20s to where I'm dealing with adults, so to speak, and they're giving me their financial history. And you're like, oh my gosh, you guys can get in so much trouble so easily. And they would cry on the phone and you're just like, okay, what do I got to do to not get here? It really shaped me.
And it's funny because this was, obviously you're in your 40s. This was 20 years ago where today credit cards are so easily, you can easily go get them. You can get more trouble today than you could 20 years ago.
Really? Is it easier now?
I think it's easier.
You think,
is it?
I think it's easier. You watch every Capital One, like every commercials out there. Yeah. I mean, when I was a kid, it was just, I think it was just Visa, MasterCard, and you could only go to get it at the banks from what I remember, you know?
Yeah.
But anyway, so you got into financial services, and then what kind of shaped you into getting into a company? Was it the same company or a different company that you kind of moved your way up in the ranks of maybe another opportunity to watch people that are buying businesses?
Yeah. So that's early.
Okay.
But I did really well at that company. I moved up. I ended up like being a seminar speaker for them where I'd go out and speak and stuff like that. And then the vice president of that company left and he was like, hey, I want you to come with me. I'll give you equity in this new company. And it was financial services. So that was like my first big break. And we ended up taking that company public. So it was like a big kind of coming out. After 2 years in the public realm, I had a little bit of cash. And then I started getting into acquisitions.
Were you married yet?
Oh yeah, we were married for sure. And it was like super hard on my wife because I would travel like 3 to 4 days a week.
Especially really newlyweds.
Yeah, we were newlyweds. And I remember she cried. She was like, oh, I'm going to miss you. And I was like, look, I got to go. Like this opportunity's here. I'm going to make bank. Like, what is wrong with you? And now we joke about it, but like at the beginning, it was just like all she wanted to do was cuddle. I'm like, cuddle later. I got to make money.
Hopefully
my wife still wants to cuddle.
I got to make money.
Today's your anniversary.
My wife still wants to cuddle.
Yeah, I know, but it's just like, I don't know. We laugh about it, but she totally recognizes it. It's just, but
it's hard. I mean, I don't know Danielle's background. Did she have parents that were entrepreneurs? Because I know you did.
He was in mortgages and she was a stay-at-home mom.
Because you saw feast or famine as well as I did.
Yeah.
So I saw like, hey, sometimes I got to travel and I got to go out of town.
Yeah.
It's going to be, but I'd rather still live in Utah and go to these opportunities. I don't want to live in LA. I don't want to live in all these other places. You know, not when we had those conversations, but that's what was always kind of that hard candy shell of like, well, we got to go do this.
Yeah.
And I know there's gonna be sacrifices, but I'm telling you, you don't want to do the famine. We always want to feast. And we've gone through our feast and famine as well, but you know.
So I was just super hungry to make money, to be totally honest. And so the first company, this one, the PHX Private Equity.
Which side are we on?
Yeah. That was that one. That was the first one that I launched. And it's funny because I look at it now.
It doesn't mean Phoenix, or does it?
It's Prancing Horse.
Prancing Horse.
Because my main goal at that time, like in my early 20s, was like, bruh,
I thought it was Ferrari.
If I can just get a Ferrari, I'll be set. You know, that was like my whole goal. So anyways, well,
dude, what's the monthly payment on a Ferrari?
I don't know.
Do you have a Ferrari?
Yeah, I got one.
How many?
I've had 4, but I have one now. It's super special. And it does not have a payment.
Okay, but
it does not have a payment.
If you set it up in a garage and could put it in reverse, will it take miles off?
No, we haven't tried that yet. Just putting miles forward yet. But yes, it's that Ferrari for sure.
Okay, so anyway,
which is on Ferris Bueller's Day Off. If you know what he's talking about.
It's super cool. I love it.
What year's
last
that?
year. It's a 62 250 GT.
And why don't you tell that story a little bit? Because you waited a long time for that.
I took 5 years to restore. Yeah, super.
Oh, so you bought it and restored it. I didn't know that.
My gosh. It's such a I wanted to get it for my 40th birthday.
Okay.
Turning 40, like I didn't realize how difficult it would be to get that car.
Oh yeah.
In
general,
you have to get on a list
in any condition.
I was on a list for like 5 years prior, got a phone call in Maui, and he was like, "Hey, this is so-and-so. Your name came up on the list." And I'm like, "What list? Like, what is this?" I haven't talked to the guy ever. And he's like, "We're going to need a wire."
Well, how'd you get on the list?
$400,000. And I'm like, "Bro, I'm in Maui. Like, I can't wire you $400,000. And he's like, "Well, we're going to go to the next person on the list." And I was like, "Hold on. Let's
take a beat."
That was for the frame. That's for the frame of the car.
Oh my gosh, dude.
Frame. So we're talking, you just buy some metal and then they build it off of the frame. So I buy the frame and then it took 5 years to restore it.
Wow.
Yeah. Never met the guy, by the way. Still haven't met him.
What?
But you got the car?
I did get the car.
It was restored not in the United States.
No, so overseas, they'll go through like junkyard, salvage, etc.
So it's original parts.
Yeah, so it's based off of an original 250, and then they hand build the body. I got as many original parts as I could. It will not qualify for an original because it's not fully soup to nuts original. It's considered a resto mod. It's got upgraded modifications to drive today,
and
but it's awesome.
The engine and stuff is
it's today's engine. Okay. It's got an LT4, so it's got 700
So I've got a buddy
horsepower.
who just did that with a Camaro that they took right from the frame and built up.
Yeah.
So it's same thing. They've got a lot of newer stuff in it, but
it just makes them more drivable.
Yeah.
And if you're gonna, that old car, the original, it's 250 horsepower. That's like nothing, And then it's got drum brakes and just. It's not as good.
Yeah, sure.
But yeah, I love the car.
So come back. We were talking about the company, and then you said, "Man, if I had a Ferrari, I would just feel like I'd make it."
Yeah.
How was it when you got your first one?
It was cool. It's just all right. I waited a long time before I bought it. Like I had bought houses and a lot of other things before the Ferrari came.
Yeah.
I had other cars and stuff. I've always been super into cars, but it was cool. But now that's the Ferrari. Like, if that makes sense. Like, the first one that I bought was just a 360.
Well, what you did there is you were buying assets first before. A lot of people buy those liabilities. And not like you didn't get a loan on probably your first one, but it's still considered like
a depreciating
Exactly.
asset. It's not a great investment. No, I bought lots of other stuff first.
Tell me more about your kids. So let's talk about what your kids, is it something you're teaching them on what you do? Have they already kind of showed interest? I mean, your kids are kind of I want to say the middle teenage years to 11-year-old, you said 2 11s.
Yeah, I think it's interesting. You've talked about your parents a little bit and how you grew up, and you got the story of how you grew up. You've talked about your parents and how you grew up in the feast or famine. In 20 years, what are they going to say about how they grew up?
Do they live in a fantasy land? Truthfully, bro, their life is awesome. But I'm really tough on my boys because I'm not interested in raising entitled boys. Meaning, just because they live in like an awesome house and they want for nothing, like they've got avenues where discipline and hard work and focus is required of them.
Dude, I think that's so fitting. Even on the way here, I was talking to Amber and we're talking about our daughter. We're like, okay, how do we just help inspire her to get up and move more and just do a little more now that we're on summer break? Yeah. And so that's interesting. I mean, what are some things you're doing there? Because I'm curious for me, like, what are some of the things that you're saying? Because same thing, our kids don't really they don't have to get out.
They want for nothing.
They don't have to do.
It's a catch-22 because I'm much more closer to my kids than I was with my parents.
Yeah.
And I want that.
Yeah.
But I worked hard for what I got and where I'm at today, and like you said, as our kids have a different type of growing up, it's almost the smarter, not harder type of situation, but you still want that harder mentality. Yeah. So what are you doing?
What's the saying? Yeah. Well,
there's only so much you can do at that age, but I think it's really important for them to find something that they can commit to. So whether it's an instrument, whether it's vocal, whether it's theater, whether it's sports, like my boys play sports. And so they are required, obviously, to attend practices. We don't miss games. They have to work out outside of the season. Like there's a structure and a discipline to that that I think prepares you later for life. My daughter's just as busy, if not more busy, doing the same type of stuff.
Yeah. I mean, that's one thing, like I say, as we look at them, and the saying kind of came to mind about what is it? A soft man makes a hard life, makes you've heard that saying. I don't even know how it goes, but basically what we don't want to do is raise kids that won't have the ability to work hard.
Totally.
And to get out and do the thing for
Yeah,
themselves.
I won't do it.
You don't want to be like Shaq. What does he say? Like when his kids say, "Oh, you got tons of money," he's like, "Well, I got tons of money. You're broke."
Yeah. I love that.
He says that, well, he says they keep on saying we're rich. I'm like, no, I'm rich.
No, I'm rich.
You're not.
You got to
You're
go
not.
out and make it.
Yeah.
Yeah.
It's a good saying.
Yeah, it is
Well
totally. So we talked a little earlier before the show. So we obviously talked about this
Which
logo.
side? PHS, the prancing
So
pony.
when did American Business Brokers
horse.
start?
2011, I was getting people asking me for help. I had already acquired 6 companies and sold them personally. And so I was having friends and family saying like, "Hey, how are you doing this? Where are you finding the money?"
I was just going to say, as a listener, I'm going to hear that and go, okay, how did you, maybe just tell us, how did you get your first one?
Yeah, we haven't had a guest that has had your type of background on yet.
Can you give us a
please.
case study on your very first business that you acquired?
Personally,
Sure.
we bought a furniture brand from 2 kids that went to MIT that were incredibly talented at SEO. And so they had just an insane amount of traffic. They got over leveraged and their mom's house was personally guaranteed on the loan. And so they were dumping this website. And so as I looked at the business, I was like, you're getting thousands of visitors and thousands of orders, but they're young and they just couldn't fulfill. They didn't have the cash to keep up with it. So we bought it for nothing. Took it over. I made my wife run it because I was busy doing other stuff. She cried for the first 3 days. She's like, "I can't do this. There's too much going on." I was like, "Listen, what is the problem?" She's like, "There's too much happening."
This is
like,
2011.
oh, it's like forever ago. I can't even remember.
Okay.
But anyways, the point that I'm getting at is she was overwhelmed with the amount of orders that were coming in.
Great
and I was
problem.
like,
Great problem to have.
this is an amazing problem. Like all you have to do is just streamline what's happening. And then once you get a process in place, everything should take care of itself. So she streamlined it. She got pregnant with the twins after 1.5 years. Twin pregnancies are high risk. And the doctor's like, "Hey, if you can reduce your stress level, this would probably be good." So we sold it for 6 times what we bought it for, plus the money we made while we did it.
Yeah.
So it was an amazing flip. It also gave her a tremendous amount of like personal growth to have like run this business.
Yeah.
Ended up being like a really good success story
That's
for
cool.
us. Yeah.
Yeah. Furniture business. That's great.
Yeah. Interesting. But yeah, that's an
in
acquisition.
buying and selling businesses, I've done obviously a couple of things, not like to your extent, but is it pretty popular out there on seller financing, or is it like,
So
because I see small groups. I won't say the groups' names.
Well, and I see
they
that
just
on Instagram.
They get some soldiers just to make all these calls and just make seller financing offers. But how is that kind of looked upon?
I'm going to frame it for you because right now we're going through like an Instagram revolution. There's lots of gurus out there saying like, "Oh, it is the time where all these baby boomers are retiring."
I've seen those ads.
The deals are ready.
Yeah.
Okay. You're a boomer. You've worked 30 years. You have this business. You've dumped everything you have into it. Would you seller finance your business worth $5 million to someone who you don't know, who could potentially run it into the ground? And after they do that, if you had to take it back over, it would probably be worth little to nothing anyways.
Makes sense.
Would you do that?
No.
I'm just
I mean, no, personally, I'd be like, no. I mean, you'd want to.
the businesses that you can go out and seller finance are one of 2 things. One, they're either bad businesses, or 2, they're hyper distressed, almost similar to the one that I just gave you. They were over leveraged and scrambling, right? So they took whatever they could get to get out of that.
So it's based on like kind of motivation and
if they're
desperation.
highly motivated or they're going under, or you think you can step in and turn around a business, you can probably seller finance that. If that business is making $2 million in profit and it's worth $10 million total, and you go to that guy and you're like, "Hey, I can't give you any money, but let me pay you as I go." And he's like, "Why? Why don't I just keep it?"
Yeah.
Why?
Yeah. There got to be
Unless there's like a massive down payment or something. That doesn't make sense.
Most of my deals have 10% seller financing in them. That's just kind of standard. Gives the buyers a little bit of comfort that the seller's still vested. But the most I've seen, it's like 30% carry. Yeah, and that's pretty generous. I think a $10 million deal, you're going to carry $3 million for a seller. I mean, that's fairly generous. Seller financing exists, but 100% seller financing does not. I don't see it with good profitable businesses.
That makes sense.
Yeah, that's interesting. Yeah, because you do see those Instagram ads that come out
all the time.
and say, "Oh, what do they call it? The silver tsunami and things like that." So
try being a broker where these guys call you and they're like, "Is your seller open to creative financing?"
And you're like, no.
He's open to cash, brah.
Yeah. You got cash.
You want some cash?
That's what he's going for.
Cold
He's
and hard.
64. He wants some money.
Yeah. That makes a lot of sense. They're ready to cut loose and live life for a minute after working a lot of years.
Yeah. And there's usually no debt on those properties. You see what I'm saying?
Business. And
it's not like you can assume the loan or something.
Yeah.
They're cashing out. They've spent 20 or 30 years in this business. They want to retire.
Do you work for yourself, or meaning like, do you have your own brokerage that you have 4 or 5 agents?
No, I've tried to hire people. The difficult part about hiring people in my space is as follows. One, it takes a tremendous amount of time to make money. Like you got to be able to go 6 months with making no money. I just finished a deal in Denver that took me 18 months to put it all together and close. Most people can't go that long without a paycheck. Like they need something. So it's hard. And then 2, you need a hybrid skill set. You need to be good at sales because you're going to deal with CEOs of companies that are fairly sharp. The other hybrid skill set is you need to be pretty proficient with tax returns and finance. You have to understand numbers really well. And 3, I really think you have to be like somewhat of a savage closer because you're going to get into rooms and conversations with lawyers. And if you're weak, you're going to get trampled.
They'll just chew you up.
Yeah, like without fail, because they're typically strong, especially on the buyer or the seller side where they're trying to protect their client. And if you can't hold your own in a room with a guy that went to Harvard Law, like good luck being a great broker. It's not going to happen.
Interesting. Yeah, that's why probably there's so few of you. It's not
a lot.
It's not like you go out and just see a ton of business brokers out there.
There's a lot of people that have entered the space, like they go from selling insurance or selling cars and now they're selling businesses. But you'll be hard pressed to find guys like me that are doing 7 and 8 figures a year.
Yeah.
Exceptional brokers are few and far between.
Yeah. Good for you, man. That's great. I did have a question kind of along those same lines because I met a guy who was a business broker a handful of years ago. And he had a very similar kind of energy, very energetic, very like in your face about like lots of things. And I think that's how you stand out. When I was introduced to you, we met at a couple of different events, but then I actually, called you about a business.
Yeah.
Actually, when Josh described you, he said, "Hey, here's one thing about Josh Lindsey I'll tell you is that he's like a no BS guy. He'll cut right to the chase and get right down to it, not waste any time." And I will say that even in our conversations, that's one of the things that I've really admired about like the way you operate, but your reputation kind of has that about it.
There's 2 Josh Lindseys. Josh knows both. In business, I'm super serious. I'm absolutely about making money and no BS. But my natural personality is super playful.
Oh, for sure.
Like super playful.
Hop on your Instagram and you'll see.
That's why
I'm a super playful dude.
That's why you and your wife get along so well.
But I'm
and they're
about
so
it.
fun.
Yeah.
Like if we're talking deals, like I'm about it.
Good. I love that.
Yeah. It's having 2 different hats on.
Yeah. No, literally. Or a wig or a
headband. I like having a good time. I feel like you should live life. Honestly, that's my dominant personality. But the competitive side of me that comes out of like previously playing sports and stuff, it just transferred into business, which is like, I'm here to win.
For sure.
Win.
Yeah.
Like I'm about winning.
I think that's what sports helped me with too.
Just having that mom mentality, the instinct.
Yeah. Cause I have 2 different hats on. My wife says all the time, like, all you did is just talk business all night. I'm like, I'm sorry. I just was, and that happened like more like 5, 6, 7 years ago, cause I always tell people is like, I was kind of hanging around with the wrong crowd. It's hard to explain, but, that's what I want to talk about, cause I wasn't talking about it during the week. I was just talking about when I was hanging out with people on the weekends, so then I've obviously changed that mentality.
Yeah. So somebody who's watching this episode and going, okay, I'm thinking about business or brokering or kind of where I'm at in life. Is there a book you kind of go back to or something that kind of motivates you?
I don't go back to books very often. I have read multiple books like several times just because they are good. I'm reading one right now that I find really compelling and interesting, which you need to read it. It's called The Psychology of Money. Have you read it already? That one's amazing to me because every chapter has this crazy take on.
It's been like 10, 15 years though.
Yeah. But like somebody recommended it to me. So it was like buried in the list. It was just like, I was getting through my books that everybody tells me to read.
Do you read or listen?
Mostly listen.
Yeah.
I think almost all of us do.
Yeah. It's easier for me to listen because I can do it like at the gym, like in cardio or something. But I've enjoyed that one a lot because I feel like it's an honest take on several topics regarding money. Like he talks about investing or how much is too much or why do people take unnecessary risks when they don't need to.
Sure.
And I've found that fascinating. That book's been good. And it's one that I'm just into right now. I would encourage somebody to read it because solid perspective on money.
Yeah, that's awesome. That's great. Any other questions you got for Mr. Lindsey?
None.
Dude, we think we've covered a lot.
Thanks so much, dude.
Yeah. Good to see you.
Yeah.
Yeah.
Love having you on it.
Yeah. See you later.
Yeah, there you go. If you do want to find you somewhere, Instagram, I've talked about your Instagram a lot. I'm a big fan.
Yeah, big fan. Thanks. I appreciate it, Zach. Good times.
There's always like 2 or 3 likes on them, and I'm one of them.
Yeah, I know, man. It's so solid, dude.
Yeah, it's good.
When I'm like, I get to 4, Zach's there.
Yeah,
you might double
I got
up.
your back, bro.
We'll put your stuff below so you have it.
All right,
but
cool.
well, thanks everybody. Invest in your future.
Invest in yourself.